Okay, welcome to our weekly Dino's recap and tales from the tar pits. Today's session, we're, as usual, going to do the two pieces. I'm going to try to do a short recap because there's really not that much to talk about. And I'm going to really try to focus on part two, which is about building and nurturing your confidence as a trader. And in order to do that, I want to ask each of you to do something really quick. Don't put it in the chat yet. But while I'm doing the recap, I would like each of you to think of what is the hardest one thing to learn as a trader, and what you think that is. There's no right or wrong answer. I'm just curious what you think that is, and then so the hardest thing, and then a second question: how does someone determine if they're a successful trader or not? How do you do it? So, this is the hardest thing for me, and I determine success or failure in the trading world by blank, and it needs to be a one answer there. Okay. And I'm curious what the answers are for those two things. So everybody take a minute, put those, don't type it yet. I want you all to do it separately. Put it on a note or something, or just make a mental note. And then when we get to that section, I want everybody to be prepared to give me their two things, their hardest thing and their what is a way you measure success. And trading against yourself is actually really interesting because that's a lot of it, the confidence thing. So we'll get into that, but I'm anxious to hear those answers when we get to that chunk. So real quickly, let's do the recap. And the recap today is really simple. Grab a TPO view, and I think it's always useful to think of the market in terms of what's the recent range. And guess what? We're out of it. 4,000 was the area we were battling. We broke out of it. And, not just by one session, but a series of them. It hasn't been trend up. Look at today, but it is, generally over time, we've come up off the lows. And I think the best way to look at this again, that puts it in the best perspective, the TPOs all kind of look like that. RTY is still sort of in its range. All the other three have broken out of their ranges pretty nicely. So, but I think a better way to look at, what's going on from that point of view, this is the dailies over 2 years. The only reason I've got 2 years is because I want to see the all-time recent highs and lows. And then, this is what a trending market looks like, the left side of this equation in all cases. Although it wasn't, RTY had stopped trending already at that point and was just, consolidating at the highs for a year. Look at that. But ever since then, we made highs in all four indexes, and we've been in a downtrend ever since then. The market's been aggressively sold. Look at the difference between the up and down. Well, this is the area we kind of broke out of that. And, if you put the fibs up, we're in the ambush zone. We've talked about all that before. And no surprise, we're kind of building value here. If you put any kind of a profile on your charts and look out, a ways, the volume is building in general as we're going up. But that doesn't mean there haven't been great short trades. I've traded mostly on the short side in a lot of these moves just because they've been really good trades for that approach. I certainly, this morning was one example. So anyway, that's a real quick summary of what's going on. I think what's more important than looking backwards and reviewing this week right now is remembering what's coming next week. We have FOMC, and not the minutes, but the actual meeting, which is the big hoo-ha show. We get the meeting results, what they're going to do, and then the press conference. So the volatility isn't just for a few minutes. It goes on for a good hour. And then we get NFP on Friday, which, arguably is the most important number that we've seen each month as far as its impact. Some of the other CPI, PPI have had some radical moves, but, most of the really crazy ones were around NFP numbers, good, bad, or indifferent. There's a lot of people with different opinions. So, and that's all next week. So I think, reading any more into what's happening this week, other than, we got out of the recent range, we're still sort of in the downtrend, but we're in the area where it could become a uptrend. People are talking about 200 moving averages, 200-day moving averages, and all that nonsense. And that's always a time to be cautious because the bulls and the bears are arguing very aggressively, and that's why we're building volume in this part of the range. And what happens is it forms an apex, and then we blow out of that apex and do it very fast. And we're seeing a little bit of that as it's trading, and a lot of that is I don't know how many of you guys saw that. There was let me see if I can bring it up on my footprint over here. I was watching it on my other monitor, but there was this massive 4,000 absorption a couple of hours ago. Yeah, there it is right there. And it traded aggressively away from that after that happened. But then, we are now we actually just went above there. So, watching that, it literally it just kept trading into that. 4,500 contracts traded, and I saw these people babbling. I wasn't watching our internal chat because it was pretty sane, but I was watching some of the conversation about this in other places on Twitter and whatnot. And the debate about, oh, well, this is an iceberg and this is that, and we're going to go from here to here because of that. And I'm like, this just could be another time frame trader, and it could have nothing to do with what's going on in ES today. It could be a giant hedge trade. It could be a hedging an options play. It could be part of an options play. Who knows? And, it's just really interesting watching people trying to figure out what's going to happen. And you just have to wait and see. And that one was, a really great short. It traded off of there really aggressively, and you had literally no risk because it never even went one tick against you, but it was fun to watch either way, whether you traded it or not. So welcome everybody again. I don't know if we have any guests. I don't think we do. Welcome TRG folks. That's the end of the recap. I wanted to make it short and sweet. And what's really more important than this week is what happens next week. We're trying to get some sort of a bottom in here, and it remains to be seen whether we will. There was a conversation yesterday in Lee's session about the hedge fund guys have talked about, what'll happen first, 3,800 or 4,200. And a lot of people think 4,200. But what's interesting is everybody thinks that the trade of the century might be when we get there, if we do. Whereas, dropping to 3,800 first isn't as interesting a situation because of the current price action. So that's worth keeping in mind. A quick short squeeze, we're only 120 points away from there right now. So, it could happen very quickly. All right, let's end that half of the Dino's weekly recap, and let's transition to the other topic. So at the beginning, I asked everybody, what's the hardest thing to learn and in trading? And name one thing that is a measurement for a trader of success or failure. So I'm curious what you guys have as answers. Please just stick them in the chat, and I'll let them all print first, and then I'll talk about it a little bit, because that's going to take us into my conversation about how to nurture confidence and what that means even. Okay, I'm seeing some good answers. These are very good answers.
I've been running back and forth, having to take out the trash because it's trash day and stuff like that. So I'm fragmented on what we're discussing.
All right. Well, I'm asking everybody to give me two things in the chat: what they think the hardest thing to learn in trading is, and the second thing is, what one way do you measure success or failure as a trader?
One thing of each.
Yeah, one answer for each. Just one simple answer, because I don't want any hedging, because that's the problem. People are going to try to hedge this. What's the hardest thing to learn? And then, how do you, for example, a lot of people think, well, the way you measure yourself as a trader is by how much money you make. Good trader makes more money. That's what they think. Okay, if you think that, that's cool. That's an answer. I'm not saying it's right or wrong. This question doesn't have right or wrong answers. I'm just looking for what people's thoughts are, because it's a big part of this conversation about confidence. That's why.
Anyway, sorry, what was the second thing again?
How do you measure whether you're a success or not?
That's right.
Yeah, do you do it by how profitable you are? Do you do it by, how many hours you spend doing it? Do you do it by whether you can do it for a living or not? Whether it's really gets you rich or not? Or, do you judge it by, how well you follow your process? There's a lot of ways to measure that. What is the way you do it? And again, no right or wrong here, but I'm going to get how your relationship with these questions affects your confidence dramatically. That's where I'm going. So, okay, let me read. through these. Okay. Okay, we have some very, very good answers. Fear of losing, learning how to sense when conditions change. A bunch of you have said psychology, knowing when your trade is wrong, becoming emotionally aware. Okay, I'm not signs of success when you don't get floss sweats in a trade. That's really more, Donnie, about signs that you're doing risk management properly. If you're doing risk management properly, and we talked about this in risk management on Wednesday, then whether the trade works or doesn't shouldn't matter. Okay, good. These are equity must go up, learning how to be wrong. Okay. Interesting. Okay, these are all good answers. Thank you, everybody. All right, so this is this is literally the constructed issue with the entire world of trading right here. Because, why are we in the market? Well, we're not here to be right or wrong. Or, we're here to make money. The problem with measuring yourself by how much money you're making in the market, which ultimately has to be the right measurement, but the trouble with doing that on any given day or doing that over the short term is that being a good trader isn't about how much money you make. If you're a good trader, then you will make money. Depending on how much your leverage you're using and how big your account is, will determine how much. But that's skipping over what it takes, and we all know this, what it takes to be a consistent, successful trader. Well, and if you ask any pro, and this is something I actually did personally once. Actually, I did it more than once. When I was in Chicago, and I was in Chicago on business for other reasons many times, and I used to go over to the CME, and back in the day when the floors were very active, and you could get guest passes to the galleries and listen and watch, and if you really knew somebody, you might be able to get on the edge of the floor and or close to it, and anyway. Long story short, these guys, are very colorful people. You've seen some of the movies about them, some of you, and they always used to go out and drink, at lunch and afterward, and you could get in really interesting conversations in the bars around the CME and around the other, at that time the options exchange was a different ownership, was down the street, and they were a different crowd. And anyway, take all this. When I would go and talk to them, and they love you, buy them a drink, they'll tell you anything, they'll talk to you about anything you want to talk about. And I used to always ask, what's the most important thing for a trader to do? And I always got the same answer from all of these pros. It's process. Develop and follow your process. And when we were talking about risk management, in the early risk management number one, I talked about Trader Dante post that I shared there, and it's in the pit, that, even if you have a really high win rate, 80%, 70%, if you run those numbers over a series of trades, you can be wrong for a long time and still be within your edge, and still, over time you will make money. But that gets shattered as soon as your emotions and your confidence don't understand that. And here's some ways that gets screwed up. So let's just talk about, and this is stuff that's literally happened to me, and it happens to me all the time, and not just years ago. It happened to me recently. So, let's just do a hypothetical. Let's say you pass a 25K evaluation and you've got your little funded account. And, so basically you've got a $1,500 drawdown. You really don't have 25K. You've got a $1,500 drawdown, and, you've got to grow the equity curve because it's a trailing drawdown. So if you have any big ups and downs, it's going to come up and get you and bite you that way. So let's say you have that. About the worst thing that can happen if you have a good edge is to have a couple of consecutive losing, and insert whatever thing you want in the next in the blank. Losing trade, losing day, losing hour, losing week, whatever. Any time where you have a sequence of losers, what happens is your confidence starts getting broken up, and people respond to that one of two ways. The first way, and one of the really common ways, is they throw the F it switch. They say, oh, well, it's already so far gone, F it. And what they do is they're just they're accepting the emotion that they've lost, and that, why even try from here? I'll just start over. And that's a very human thing to do. You're trying to, in a way, to cut your losses, and you're also trying to eliminate the emotional pain. And so when you do that, it's horrible for your confidence, because you had a goal, you thought about it, you established your process to not blow it, that account up. And then all it takes is a couple of sequential bad trades, bad days, again, bad weeks, put whatever you want in there. And people, get very down on themselves. And so right there, the big warning light goes off, okay? You can't judge your performance in the short term by your profits. You have to look at your P&L, for example, on a weekly basis. Even that sometimes doesn't work. But if you're trying to look at your P&L, every trade has to be a winner, or every day has to be a winner. You're already dead. You've already lost, because the statistics, it doesn't matter how good your edge is. Let's say you have a 95% edge. 95% of the time it's right. And you're perfect at scaling it in leverage. You make no mistakes. Given all of that, you will still have 2 bad days in a row, some frequency of time. And that's what the spreadsheet that Trader Dante made, and it's in the pit. It shows, how often, and it'll blow your mind how frequently that will happen. And so what people do is they get married to impossibleness, and this is my biggest problem right here. They get married to, no losing days, no losing trades. You got to do this perfectly, and that it just doesn't work like that. And I have done many times, I have done that with cash accounts, with evaluations, with, whatever, where, once I got to a point where I'd had some sequence of losses, or a fairly big loss that I wasn't prepared to have. And again, I've talked about this in risk management, how not to do that. But once that happened, my confidence in the next day was gone, or in the next, trade was gone. And so I just started making stupid mistakes because I wasn't following my process, and I would get emotional. And, we've all been there. We've all done it. So how do you not do it? And this is something I've worked really hard on my whole trading career, because in my opinion, this is the most important thing. And that's why I brought it up. The most important thing to learn as a trader is the nature of this game statistically. And also, I strongly recommend this book. I've said it over and over again, Fooled by Randomness. A lot of people think that they have an edge just because, it's profitable every now and then. So now I just have to, get better at taking the good ones and not take the bad ones. That kind of thinking happens. And yeah, you want to do that, obviously, but you can't remove the statistical, not likelihood, not probability, the statistical certainty that no matter how good your edge is, you are going to have sequential losers, and sequential losers will crush you. No matter how confident you are, if you're overconfident, then you'll just have more sequential losers in a row before you finally start getting depressed. And that's how it happens. And a lot of traders are kind of bipolar about that. And you got to be really careful with this problem right here. So we'll talk more about that in a little more detail. But before we do that, I want to say the first thing that I figured out to stop myself from doing that was to use circuit breakers. And circuit breakers are really simple. You make them yourself, but what do I mean? Well, for example, on any given day that I have 3 trades in a row that don't work, that's it. No exceptions. That day is over. Because what happens to everybody, myself included, you have 3 in a row that are bad, and maybe you walk away for a while, you come back, but you're already thinking in terms of making the money back. You're not clear-headed. You have to just stop somewhere. For me, that's 3. It works really well. And then the same thing with losing days. If I even have 2 in a row, and I do every now and then, even though I'm pretty consistent as a trader, every now and then something goes wrong. It might be totally unrelated. Maybe one day I had a systems related problem, and then the next day I was frustrated from that, and I was trying to make up ground, and I was negative again. If that happens 2 days in a row to me, certainly 3. But when I get to 2, I pretty much stop trading for the week. And as it just so happens, the last time that happened to me, it was Thursday and Friday. So, that was a really good spot to quit and reassess. And you know what I did the following week? I scaled down 90%. So I went from trading 10 lots to trading 1 lots. And I stopped trading all of the funded accounts and cash accounts and only traded evals and sims. And I did that for the first 3 days of the next week. And it was, it's like getting your confidence back. I know I do this well. Why did I have those 2 days in a row? Well, it could just be, the randomness of my edge. If I'm 80%, then 2 days out of 10, I'm going to lose. And if they just happen to be one after the other for whatever reason, maybe I didn't sleep, maybe the market conditions weren't really conducive to my style, whatever it is, you have to break the pattern. So this is the first way to stay sane with your confidence, is to break any patterns of negativity. And I'm going to the part 2 here. So the most important thing, in my opinion, and the most important thing for every professional futures trader I ever talk to, and literally, there's no exception to that, the most important thing is your process. And that takes you to item number 2. The way to measure yourself should be, how well did I follow my process? And if you do that well, then your equity curve will grow. If you're measuring yourself by your equity curve growing, you're going to be always focused on the money. And, from a risk management point of view, you have to be focused on the money. But money doesn't lead to good process. Good process leads to money. And it's really important to understand that relationship. And so whenever you're beat up or your confidence is shaken, the first thing you have to do is go back to the basics, get your mind out of the game, take a break, circuit breakers, and then come back and do it much smaller, but do it exactly the same way. Even if that means just trading 1 micro a couple of times a day for a week or a month, sometimes that's what it will take. You know you better than anyone else. But if you don't feel confident in your edge, then, who is going to? I mean, what'll happen is you'll question your judgment when you're losing money. Is this ringing home for any of you? I mean, for me and coaching people, I see this just over and over again. When you start losing money, instead of just putting that within your process and your risk management, you start thinking, oh wow, I'm wrong. And yeah, you want to think you're wrong and protect your risk, but if you let that wrong transfer into an emotion and you start getting down on yourself, then you start going down that F it switch path. And I got to tell you, in my experience, once you start going down that F it switch, that, I don't care anymore. I'm, revenge trading. I'm, now I'm just going to YOLO this because, it renews tomorrow anyway. You can't nurture that feeling, because then that's what you'll do when your process breaks down. You have to nurture okay, I'm comfortable and I'm confident, and when I'm not making money or it's not working, I have to cut it off right away, and then I have just to go back to the basics. And, this is true in every professional endeavor that requires a lot of practice. I mean, if a basketball player isn't scoring his free throws, what does he do? Well, first of all, he stops shooting them, and then in practice, he practices more of them and shoots them over and over and over again. But, for example, if you're a star guard that always that's the guy to get fouled. If you know American basketball, that guy, we want him to be the guy that gets fouled so that he shoots the free throws. And if that guy, for some reason on any given day, is missing all his free throws, then, the reaction of the team is, we'll put someone else out as a decoy to get fouled that's shooting free throws well. And that guy will go back and practice. Trading has to be the same way. And if you're a perfectionist, and I am one, there's no question about that. It's really hard to not try to get it perfect every time. And for me, that's reflected in my win rate. I've said this many times. I'm really good at getting out of a trade that's going against me, by scaling it or, trading in and out of it or whatever. And when that has happened, I tend to take profits and get flat or close to it on the profit side as quick as I can. And often those trades go a lot farther. And I used to think about that and say, I have to let those go farther. And then I thought, that's stupid, because my skill there is getting myself out of trouble. And again, that's a different event than a trade that works right away and it's in profit and I'm scaling to make more money with it. And what happens is, if you lose your confidence, then those two things become the same thing in my world, in my example of me. And so every time I'm wrong, I'll super scale it and it'll just keep making me wronger. And that's happened again recently in the last few months. That has happened to me twice. And on both of those occasions, my circuit breakers took me out of the day. And in one case, out of the week, the Thursday, Friday. And in the other cases, it took me out of the day, and the next day I immediately was able to make it back and then some. And, and again, that fits in my risk management model. This is something I've said many times too. Whatever my daily profit is, let's say an account has an average of $300 daily profit. Under no circumstances will I ever let that account lose more than $600, more than 2 days of profits, assuming it has any sort of average, any sort of, length of time to have an average, because that's reasonable. Again, that fits within the ebb and flow of trades, that have a good edge, but there's going to be some losers. If you let yourself take big losses, then, you've got to make so much more just to make it back. And again, that crushes your confidence. It's not that you can do it or you can't do it, but anytime you let yourself go there, you're risking your confidence. And once your confidence is gone in this game, you're screwed. Because even if you have a good edge, you're gonna chase trades. You're gonna take too much risk. You're gonna do all the things wrong. So, very, very important points. Again, none of your answers were wrong, but for the purposes of this Dino session and from a lot of experience, I would suggest trying the idea of measuring, your quality of your trading by your process. And did I follow my process? Because if your process is decent, it should grow your equity curve over time. And you should go back and say, what things can I do to create a protective, net around my confidence? What things really mess me up? Stop doing those. I was helping somebody just on Messenger. I wasn't even really coaching them. Somebody reached out to me and I kind of knew who they were. So I answered them and, they told me this is what they were doing. This is really interesting. I can pass 50K and I can pass 25K evals over and over again. And I keep thinking I want to get bigger ones because I want to trade more risk and I want a bigger drawdown. So what I do, I go get a 150 and then I just become a total idiot with the way I trade it. This is this person talking to me. What is that? Why am I doing that? And I said that, that's really common. That's why, they have the whole structure of, 150K. As soon as you get a little bit of confidence in an edge, the first thing you want to do is make it a lot bigger. And then you blow up all the edge you have, and it ruins your confidence. And so you go back to the beginning, but you don't go back to where you started because your confidence got shattered. So you go back further, and this is the game that the industry plays with everybody. And until you understand that game, and you understand that the way to not play the game is have an ironclad process and measure your success by your adherence to that process and not by how much money you're making, although we are ultimately here to make money. But the way you get good at making money, again, process leads to profit. You don't have a better process just because you're making money. In fact, it often distorts your process because when you have a big winning trade or a big winning day, you don't understand that it was just luck, and it was. You need to burn that into your brain. So let's see. Let me. I'm curious if there's any thoughts, feedback as I'm doing this. Let's see. Statistically, your fourth won't be a loser. Thoughts. I hope you're kidding, right? Okay. Let's see. All right. I agree with all the comments, but I don't see any. What do you guys think about what I'm saying here? What are the things that ruin your confidence? What has ruined your confidence? Obviously, having a bunch of losing trades in a row is a huge one. What else? Are there other things that affect your confidence? Okay, letting it sink in. How about this one? Let me ask this question. When you see a really good setup and you don't take it, you sit on your hands when you shouldn't, gun shy, afraid to pull the trigger. I get that all the time, particularly after I've hit a circuit breaker. Like, at those 2 days in a row that I had losing days, the next Monday and Tuesday when I was trying to just tiptoe my way back into my confidence, I was afraid to pull the trigger, even though there were really good setups. I was like, and I don't know what that is, but you have to learn to just let that happen. And, when you're ready to pull the trigger. And it might not be the next day back. It might be 2 days later, might be a week later. And that's why, giving yourself really artificial goals about how much money you're going to make every day just doesn't make sense. Weekly makes a little bit of sense. Having a P&L, evaluation every week. That's what I do. Every Sunday, I look back on the week and what days I made money and what days I didn't. And I judge based on that. But, if I had a really good day, I'll look at the process for that day. Did I adhere to my process? And, if I really did, then I say, okay, cool. Then that, the money's a result of that. But very frequently when there's a really big winner, I'll look at it and I'll say, well, the process wasn't particularly good or bad there. I was in it. But, it wasn't like I had some super thing. It just, I got a runner or whatever, So, and I try, and here's an important point also. I try not to let that make me more confident. That's why I do that. I say, you know what? That huge winner, the minute I start patting myself on the back for good performance and money, I immediately make a big mistake. And this is something I've shared with you guys over and over again. And I hear this from lots of traders that you're the most vulnerable to have a big loser after you've had a string of winnings, whether it's days or weeks or, trades in a row. You're much more likely to make a really big mistake after that. Again, because you're nurturing your confidence and you're getting away from risk management. You're deviating from your process. So process leads to profits. Yeah, the beauty of that statement, one of my mentors taught that to me, Jeffrey. The beauty of that is all you got is turn around the other way, and it's completely comical. Profits lead to process, And so as soon as you look at it that way, you immediately understand what you have to do. And, profits leads to insanity is what he used to say. So the whole sentence was process leads to profits and profits lead to insanity. And so you have to go back to process. And that's so true. The more money you make, the less focused on process you'll be because, I got this, and that's the human, recency bias. You all know what recency bias is. You judge your performance based on what's just happened recently, or you judge the chart based on what's happened recently. And that may or may not be valid. If we just got NFP, the most recent thing is the aberration. It's not the normal. Okay. So complacency absolutely is an enemy, Donnie. That is so, so true. And that's that's why this is so hard. And so if you look at this from a point of view that the hardest thing to learn is building an ironclad process, constantly improving that process or focusing on it or focusing on ways to focus on it, whether it's your layout of your screens or your charts or your domes, everything should be about keeping you in your process. That's why I've said this several times too, but for example, when we were talking about the fourth LRC in the risk management class, that's not there to show me how to make money. It's to show me when I'm wrong really visually. So I can't miss it, so that I can't get that thinking that I'm invincible. If we go through both of those LRC levels, it's a really good opportunity back into the range. But if we don't go back into the range, you are totally and completely wrong. It's just that simple. And I like things that are that easy to keep, because look, the smarter you are, this is the problem with trading. Trading attracts really smart people, and really smart people overthink everything. And so you have to embrace the idea of simplicity, and, as simple as you can make your process, then it will be simpler to make profits, and it's easier to practice. And so, the way to preserve your sanity with respect to trading and your confidence is, number one, protect your confidence, guard it. If you don't have it, you're screwed. You should be meditating or doing something to get focused before you trade. Most people do. And part of that for me is to say, okay, I'm here, I'm competent, I have a good edge. I give myself a pep talk, even though, most days I make money, that's just human. It's like when I was on the track team at UCLA, before I got in the starting blocks, I would run myself through my race visually. How am I going to come out of the blocks? What am I going to do? Who's on left? Who's on the right? And then, you reset and you do it. You just practice over and over again, and then you execute, you do it. And, should you lose confidence if, in that example, if somebody beats you in the race? No, if you ran the best race you could, then what else could you have done? That guy's faster. But, if you, didn't follow your process out of the starting blocks, you came up too fast. That's the number one thing a sprinter can do wrong, is not stay in a semi-crouch coming out of the start, because, you're running into the wind, and the wind is getting caught on you. So you got to stay small. And that's why small sprinters start faster than big sprinters, and big sprinters finish faster because they're stronger. And so, was that your mistake? You came up too fast? Well, then you should be not proud of yourself. You could have done better. How can you do it better next time? That's got to be the loop. That doesn't hurt your confidence. You know what that does? It improves your confidence, because you look at each mistake as a way to learn and get better. And it took me a long time to really embrace this, but this is the last point I want to make to you. You will learn much, much more when you are wrong and when you lose money and when you make mistakes. Learn to really embrace that, particularly if you're doing it in an eval or, a funded account, because, it's not your money. And that is a great way to learn. Stay focused on that process, and anything that doesn't work, is there a way to make it better? And if your confidence isn't strong, how do I protect it? You've got to think that way. This is a really hard game to stay in. It's very individual. You trade alone. It's not like in a lot of corporate jobs where, there's 3 managers with roughly the same responsibility. And if one's not doing the job at any given moment, the other 2 will pick up the slack, and that's true in so many other things. It's true in a lot of sports, team sports. This isn't a team sport. This is individual. It's like the track meet. Yeah, they add up the scores for everybody, or there might be a relay race, but it's all on you. And so, you have to really nurture yourself. And, because we're smart and we tend to be perfectionists, we beat ourselves up a lot. And so, the answer is to find a way to beat yourself up productively. And that's take it back to your process. Learn from your mistakes. How often have we heard that growing up, right? Turns out it's true. Okay, let's see. I see a nice long comment. Let me read it real quick. Oh, this is such a good one, Maria. Struggling with the larger time frame. Yeah, this is a long game. Oh, I love what you wrote there. Everybody read it. And let me I'll summarize it. That, being able to look at, losing trade, losing day is fine. But over time, the large time frame, that is so true. And, even weeks sometimes feel like, oh my God, getting to a week and looking at it, that's way too big. But again, in hindsight, if I looked at my trading, looked at the results of my trading, look at how good my process was or whatever, I find over and over again that the correct view is to really zoom out, because market conditions are never the same. And you can have a really good edge and trade it at a certain time of the day, and it could just, be rocking and rolling every day, and then it can go away for a week. It can go away for a month. Sometimes it goes away forever. And those are really hard. We've talked about that before, adapting to changing conditions. Here's my simple answer to that, and you already do it. But I think for new people, you should absolutely focus on one instrument and as close to 1 or 2 really good setups with that instrument as possible. Because then it's really easy to look at whether you're adhering to process or not. And, and it's like anything else. You're becoming a specialist, and a specialist will improve faster than a generalist. And for example, this is why, many of you have been in TRG for more than a year. I used to have gold and oil and sometimes other things up on my screens all the time because I traded them. And the indexes, right around the COVID stuff, the indexes got so volatile and there was so much good trading and the correlation was so good, or the lack of it was really informative. And I realized that trading anything but the indexes wasn't very productive for me. Yeah, sometimes I made money, sometimes I didn't, but it was taking away from me becoming a really good specialist. And then, fast forward to today, and now I'm, a swarming MNQ and sometimes MES specialist. And my profitability is better than it's been in a decade by a dramatic amount. And I mentioned this when I talked about risk management 2 in the risk management 2 session. It was like an 80% improvement when I went to the swarming micros, as opposed to trying to trade minis and micros and trading other instruments besides the indexes, and primarily NQ, MNQ, and ES, MES. And now I occasionally trade the other 2. There's been some good days for YM. There's been some good days for RTY. But I'm not a specialist in those. I bet Maria knows more about RTY than I do. So that's a really important point. Specialize, nurture your confidence. You're going to get beat up, and nobody knows what you do. Your friends won't be supportive because they don't understand it, even if they're trying to be. You really have to focus on what matters in this game. It's a long game. Focus on your process. If your process is good and it's improving and you keep it simple and keep it limited in the number of instruments and setups, then that will lead to profits. Profits lead to confidence. Once you have confidence, you can scale more. You can trade more accounts at once with copying. You can trade more setups throughout the day. But you got to get to that spot first. If you're trying to jump back and forth, around all these different types of opportunities, then you're never going to get good at anything. And this will be a really frustrating career for you. So I think that's, again, let me just repeat really quickly. I think that's the bottom line right there, the last thing I said. This is hard enough. So here's how to make it easier. Nurture your confidence. And the two ways to do that is to focus on your process, not how much money you make, and to take a longer term view. And I know that's hard. A lot of people come into this and say, I'm gonna give this everything for 6 months and see how I'm doing. And you're setting yourself up to fail, because you will not master this in 6 months. But if in 6 months you had a decent process and you could see that when you follow it, you make money, and when you don't, then you have had a really successful 6 months, whether you made money in that or not. One of the TRG members posted in the pit at the end of last year that, they had expected to make X amount last year, and instead they made a fraction of that, but they were posting about all the things they learned and how much they improved. And I thought that was such a good post, because that's the right way to look at it. When you have your big years, they'll just happen, and whenever that is. And as long as you keep improving, you'll get there. But if you continually question that and let yourself get down and change how you're doing things and jump from one instrument to another, then it's going to be a frustrating ride. It really is. And you'll spend a lot of money on it. Okay. The season thing, that I've felt seasonality in my trading over the years, Maria, to your last comment, and the cycles. And you're absolutely right that just is the way people are. And particularly, you have a family and kids, and so even more so, my world is more manipulatable than yours is. And that's critical. You have to consider that. And, just like health, when I was younger, I used to be able to sit and scalp at my computer for, 12 hours straight. And now I really have to conserve my energy. And you know what? That's really frustrating. And it messes with my confidence, because, I won't be in the room when there was a really good setup, because I, felt like I needed a break because I'm getting so old. And, and I used to be able to, there's a good setup coming, I'm just going to sit here and wait for it, and then I realized again, you know what? You got to adapt. And part of adapting as a trader is as you age. And part of it is adapting to changing conditions. And, you can't beat yourself up for that stuff. You have to just understand long-term game, measure it on very long-term, focus on improvement, and focus on a process that works with some measurable success. And the success, again, is the process. So what does that mean? Well, if you're, I'm teaching a couple of people to trade ledge breaks. So ledge breaks are really simple trades, whether you go with them or you fade them. It's not a complicated, I'm right or wrong and where your risks should be. It's a pretty simple setup. So if you're following your process trading that setup, it should be really obvious. And it would be really hard not to be making money following a good ledge break trading process. The answers to why it wasn't making money would be really simple things to fix, because they'd be really visible. So that's one simple current real-time live case study. I've been focused on that trade myself, and I've focused on it with some people I'm coaching. And good place to start. So is a simple structural trade, A to overnight or B to A or whatever it is. Just do that thing and, be the best guy in the room on that one thing, a couple months from now. And then, if you're not making money, then either that thing isn't a profitable setup, or there's something really simple that you need to change. And usually, by the way, that if somebody is doing the first part and they're not making money, almost always what's wrong with the second part is risk management. They're taking too much risk, because the edge works, but they're trying too hard. And so they're losing too much money when they lose, trying to make more money when they win. And that blows up the whole the whole profitability of it. I've seen that probably 4 times among TRG members that have shared with me in the last 2 months. So if you have a good edge and your process is good around your edge, and you're still not consistently making money, then the next thing you really need to drill into is you're probably taking too much risk. Your size is probably too big. Your risk management is somehow off. And so you really need to focus on that. So let's see. Okay. We're right about where I wanted to be. I was shooting for 45 minutes this time. I try to get it between 30 and 45 because I really want these Dino sessions to be short and sweet and just, boom, boom, boom. Here's a way to do that better. And so the takeaway here is, I've already repeated enough times what I suggest you do, but to wrap up, let me just say, I've gone through this over and over again, and I still go through this. This will not go away when you've been trading for 20 years. And 20 years profitably, successfully. This problem will actually be larger because you probably will have scaled up. And therefore, even though you make more money each year, the variability is probably larger because, you're slinging more leverage. And I've said this in a few live sessions. That's why when I practice or I demonstrate techniques, I always show it with a couple of micros. And I show how to consistently make like $25 or $100 on a trade, because if you can do that, then you can add 10 times to that and scale it. But the psychological swings of trying to trade it scaled ruin even experienced traders. Don Miller in his book, The $1 Million Trader, talks about that. When you're slinging a lot of size and, a P&L can go up and down by $20,000 in a trade, you have to be able to wrap your brain around that. And the way you get good at that is by being confident with $25 trades, and then 25,000 trades look the same. That is honestly true. And it will keep coming back. You will never outgrow that. So just get used to it and get good at it. And I promise you it will improve your trading experience. How's that? Okay. Are there any questions, any comments? I see some good comments, obviously, that we already had, but any other feedback? Okay. Thank you, Robert. I appreciate it. Anything else? Okay. I don't see any other comments. JVC, anything you want to add, take away, disagree?
I don't have anything I can add to all of that. I agree with all and then some.
Yeah, and you're one of the people I see some of this in, and you're not alone. There's so many people that, they're so close to getting it consistent, and and it's so frustrating. And I watch them beating themselves up, and I watch their confidence getting shaken, and that's why this session was important to me. It's nurture that confidence, find ways to do it, and just stay on the path. You guys see me type that a lot. Stay the course. I love to say that because that's really what you have to do. It goes to Maria's point also about it's really hard to look at this as a long game. So you just have to constantly tell yourself to stay the course, stay on the journey. You'll get there. One more comment and then we'll wrap up. Credelli said the interesting thing about really long-term traders that he's noticed is most of them really couldn't do anything else. And I thought that was hysterical because, it's not like any of us can go out and get, mainstream jobs at Google or whatever at a high level. But this is something you can do at a high level just by practicing. Nobody has to hire you. It's a meritocracy. So the only thing holding you back is you. And I will leave it there. All right. Have a good rest of your Friday. I will see you guys for the close. Today's close should be really interesting because we're right now up at the top again. And, we're in the 90s in ES. So, we're going to see 0-0. And then, could the pullbacks be interesting? Absolutely. Real quickly, I'm just throwing up my VWAPs. Right now, we're only about 20 points off the VWAP, and we're, kind of entertaining SD2. And that's where it gets interesting going into the close, between there and SD3, which is currently 4106. So this is a very interesting setup, as usual, for Friday. So I'm going to take a break and get some rest before that. But please join me for the closing session. There's a good chance I'll open the room early because it is a good setup. And I think, we might get some good trades. Look at this right now. ES is right at its ledge. YM is really close with a real nice tail, but it moves a lot. Same story with RTY. And NQ, it's the strongest of them, so it's leading, so it doesn't have quite as good a tail. But look at all the volume it's forming up here, way off the value area. So this is going to push up higher and set up a good close one way or the other, a short squeeze or a pullback into value. So join me for that session. I think we're going to have some fun. All right, guys. Thank you much. We'll see you then. Have a good one.